Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists, you name it, all over the world of crypto and blockchain. And I have an amazing guest today, and I'm excited about this interview because this company seems to be doing really well recently, and I'm excited about them. And my guest today is Joao Reginado. He is Chief Strategy Officer at M0 Labs. Joao, welcome to the show.
Thanks, Jamil. Thanks for having me.
You're very welcome. Very welcome. And first question to kick things off is I'm going to ask you, what is your background, and is it a logical background for what you're doing now?
Yeah, I love that question that you have to guess. I think it is a very logical background, actually. Even though looking backwards, as Steve Jobs said, it's always easy for the dots to connect. But I have separated my career into two phases, and they are kind of equally lasting at this point now. I have originally a very technical background, graduated in computer science, worked as a software engineer and led teams of software engineers for many, many years. And funny enough, I tell this to people, funny enough, back in 98, 99, when I started working professionally, the first technology that I dabbled with was cryptography. It did not have to do with blockchain at all, but I was doing some work on security of networks and the early internet and things like that. And actually, I always like to joke that my boss at the time was writing a PhD thesis precisely on the use of cryptography to potential like digital cash applications. And so I remember helping him as an intern does, besides writing a bit of code and bringing coffee to the bosses, like I also helped him review his PhD thesis. And I remember being fascinated by that particular application of cryptography. I never thought that, that could be one of the uses. Usually people associate cryptography more with security, right? And keeping things safe and obfuscated. But in any case, I went and had my technical part of my career in financial services for many years, work in regional banks. I'm originally from Brazil, so worked in regional banks and larger banks in Latin America. Then I moved outside of Brazil, worked in some financial services spaces in Europe as well. And then I decided to make a shift in my career and moved over to more of a product function. And I decided to do a master's in business in 2012 to kind of support that transition in my career. And the best thing I always tell this joke as well. The best thing I got from my master's was finding out about Bitcoin, because that's when I found out about it. I had a colleague that just dragged me into that sort of rabbit hole and started explaining it to me. And as I said, because I have had that exposure to the raw technology behind something like Bitcoin, public and private key cryptography and all that, so I felt that I immediately grasped that, and I immediately thought that it was very promising and something I wanted to spend more time with. I didn't do anything immediately professionally speaking, but then in 2015 I joined Circle, and that was my first kind of foray professionally into the space of crypto and blockchain. I worked for Circle for 8 years. I led the build out of USDC, which is the second largest dollar stablecoin product. Has been between fourth, fifth, sixth, seventh largest crypto asset in the world, which is a pretty amazing product that we created there in my tenure over there. I led all the product teams in the stablecoin space for many, many years. And then last year, decided that it was time for me to do something different and decided to join M0 and the amazing team that Luca and Oliver and Greg are forming, because I think it's very promising. But that's all to say, going back to your question, that yeah, I think I have a logical path now looking back to my trajectory, always kind of connected somehow to the technical underbelly of financial services and trying to improve that.
I don't usually have a follow up after this question, after my first question, but I do today. So you were introduced to cryptography in 98, 99. Bitcoin came about in 2009. There was 10 years between when, that time that you were learning about cryptography and Bitcoin was creation. What took them so long to create Bitcoin?
That's a great point, and I think Bitcoin is like one of those amazingly elegant products, right, or pieces of technology. And I think Bitcoin actually there wasn't much like fundamentally innovative in and of itself in Bitcoin. Maybe that's a bold statement, but I think whoever Satoshi Nakamoto was, I think the great thing that he or she or they were able to do was to actually connect a lot of these technologies together, because I think Bitcoin connects a lot of evolution on kind of the ability to prove work without the need for trust between counterparties, right? That was a big element, I think, missing in earlier attempts at developing like digital cash models, because digital cash demands like digital scarcity, right? And that's a very, very hard thing to design. And I think Satoshi was able to like put those things together in a beautiful way, but also then the ability to kind of link that with the emerging blockchain research that was happening many years before as well, and kind of adopt some improvements on even things like disk space utilization, the use for Merkle tree and hashing those things instead of using other approaches before. I think it was really like a connector of multiple disparate technologies into something that actually worked for the first time, and it was scalable. And the proof it is today that it is scalable, and it has been so resilient and secure for over a decade. And those things take time. I think cryptography in general is a body of research and technology that is decades and decades long, right? A lot of what we do today, when we create an account on Ethereum, right, to have some tokens transferred, that creation of public and private addresses and keys, it all comes from like the 60s and 70s. And so I think that's another reason that I, as a technologist, have to kind of believe in all these spaces, because it's really based on sound research and sound technology that has been created for years. And that it takes time.
Yeah, we're learning that. We're learning this week and the last few weeks in the crypto market that time takes time. Um, so, um, M0, like, what's it all about? What's your role? What's your focus? What do you guys do well?
Yeah, so I'll start with the simple one and then go to the more complex. So I lead both product and strategy for M0. What that means is like both product and then obviously getting those products to market, right? The business development, the marketing, the ecosystem development that is involved with a complex offering like M0, because M0 is not actually a product. M0 is infrastructure. So there's a short term and a long term kind of explanation to what we do. The short term is that we're building infrastructure to power an open federation of crypto dollar issuers. We like the term crypto dollar over the term stablecoin, because I think stablecoins, we can talk about this more in detail, but stablecoins are these types of crypto assets that people have created that, as I think somebody has defined it, attempts to peg the value of a crypto asset to the value of something else. But that's just one element of what I think is necessary. So in any case, we prefer the term crypto dollars because I think similar to euro dollars and to other forms of dollars, I think it's more holistic. And to go back to the definition of what M0 is trying to do, as I said, so we're building this infrastructure that is both on chain, but also some of it off chain. And it powers a network of issuers of these types of assets. And why are we trying to do this? Because if you look into the stablecoin space as it is today, mostly dominated by Tether to a large extent, and all the products that they have successfully created over the last number of years, and then also Circle, and then to a less extent, some coins developed by Paxos, some decentralized options like DAI from Maker, and things like that. There's a lot of different categories and ways of implementing those products, but in general, they all suffer from sort of the same problems, which is they are centralized around like one particular solution, one particular siloed issuer. They are pretty commoditized at this point in terms of the technology that is used, and yet they are completely non-interoperable, right? So if I have Tether and I send it to you, but you as a user, Jamil, you prefer to use USDC, good luck. Like there's no, you're going to have to go and essentially use like a trading, or as I prefer to say, a price discovery mechanism to go from one to the other. And you're going to leave some dollars behind. You're going to leave some fees behind because the price discovery can go one way or the other depending on the day, and there will be fees because it's a trading operation, et cetera, et cetera. When you look at how we love to bolster and talk about decentralization in crypto, right? But actually those products are extremely centralized and extremely non-interoperable today. And then if we look at the equivalent in the traditional world, which is really banking, banking has been decentralized and federated for many decades, right? And so we have to put our money where our mouth is, because there's no reason, it's just due to poor technology, honestly. There's no reason why these products should not be more interoperable and should not be issued by a much larger number of counterparties, as opposed to, no, this is all mine and I'm the only issuer of this thing. It's all down to the complexity that can be addressed by technology. In the longer term, if you want to then think about how this impacts and why this matters in the longer term, I think we're all, as with many others in the space, we're all on this journey where we want to bring money to the digital era. We want to bring money to the internet era, right? I think just as the internet has disrupted so many areas, from the early days and continues to do so today. There's always, I think, the immediate version of how digitalization and the internet more broadly impacts a particular type of category or product. And then people over time realize, oh, hold on a second, this can be entirely reinvented, and then you actually disrupt these models. So for example, I'm sure you remember, the first version of the digital version of the New York Times was like a scan of the print version, right? Like people would create those PDFs and they would put them online, and oh, now there is the New York Times is now on the internet, right? Obviously, that was very naive, but it was what people could immediately, grasp and think about when they come across a new technology like that. And then eventually they realize, oh, hold on a second, like the internet completely changes the way newspapers are distributed. And now my version of the New York Times can be different to your version of the New York Times, because now there's personalization on the spot, right, on demand, and so on and so forth. And then the business model changed and the ads model changed. And now we have like a completely different newspaper industry than we used to have back in the 90s, right? I think the same thing will happen to money. Today, we're very used to, how we interact with money, but the reality is that stable coins are kind of the first, like digitalization attempt at dollars. But it's also a very naive one, right? It's just, as I said, it's just a scan of the physical copy and putting that copy somewhere else. But there's a huge opportunity for you to go down this technology stack of money and allow the blockchain to kind of disrupt and make it significantly more efficient, which is the goal that we have.
Sounds good to me. I think stable coins get there are some bad connotations with stable coins, because when I hear stable coins, I think Terra Luna, I think other things that lost their peg and caused, right? Crypto dollar sounds more reasonable and logical. So let me ask you this: how do you democratize access to money issuance, right? Infrastructure, and then revolutionize the technology money stack?
Yeah, I think I have, and I have actually written about this a number of weeks ago. But I think when you have to be a nerd about money and really try to go and understand a bit deeper how money actually works to figure out what layers of money have already been disrupted and what layers of money can be further disrupted, right? And I think we have grown accustomed to this idea that fintech, right? And fintech is a thing for the last 2 decades at least. And, we have all, to different extents in different parts of the world, but we have grown to become accustomed to a lot of innovation in what I would call the facade of money, right? So all of a sudden we started having things like Venmo, and it was super easy to pay, friends and family, perhaps more of a cash experience, but in electronic forms. Cross-border payments has improved somewhat around the edges. Opening accounts with banks became significantly easier, and people can do that over the internet when it used to be a pain and you had to go to a branch and things like that. So a lot of the way that people experience, and then, not to mention like credit cards, debit cards, like Apple Pay, like, the tons of like payment methods and instruments that we have seen innovation on in the last number of decades. But that is all really in this kind of facade of money, right? It's like you already have money. How do you use it more easily? How do you transact more easily, particularly for commerce and other types of use cases? But money has actually other fundamental layers that are super important. First of all, at the base layer is this kind of agreement that we have as a society on what actually is money, what part of what we call money has actual value, right? And this like changes over time. Like societies have evolved over time since we have known as humans to use money, over 5,000 years ago. Sometimes people value things that are more backed by commodities or precious metals, right? And sometimes like it goes the other way, and we are happy as societies to just ascribe value to something that is really more of a social construct, right? So trust, for example, trust has value. I trust the government of the United States to pay its bills, or I trust the army power of the government of the United States, things like that. Those are kind of social constructs. And if you say, we're going to build money on top of that, then a lot of people are going to say, yeah, it sounds good. That's sound money. That's on the base layer. That's not for me, I think, to attempt to innovate. That's a lot more kind of fundamental in nature in how it evolves. Although it does evolve, it tends to take hundreds of years and centuries for people to move between one option and the other. Now, between these two things that I mentioned, so how money is used on a day-to-day basis in this foundation layer, there's a whole body of like technology that people usually don't care about, right? So these are like where the banks are like centrally like positioned, right? So who actually creates and destroys money and money supply, right? How is it done? Like, how is it governed? Who is authorized to do that? What are the settlement mechanisms that happen there? If it is a federated system as it is today, how do you ensure interoperability? How do I know that I can move my Chase dollars to my Bank of America dollars and they are interoperable, and there is no trading or price discovery there? So this is what we call by the middleware of money. It's this whole technology stack that exists primarily in central banking and commercial banking systems around the world that we think we have grown over the last number of decades to make it, or centuries even, I should say, to make it too centralized and too cumbersome, right? Because I think you would also agree with me that regulation is something that also evolves in waves, right? You have more maybe more conservative, like seasons or decades, and then you go back to more relaxed decades, and we keep going and bouncing back and forth. We are in a very, very kind of stringent phase of our existence, right? And I think the global financial crisis and a lot of things have contributed to that. But if you zoom out and you think, now that we have blockchain and we have crypto technology, if we wanted to reinvent this middleware for money, what kind of entities should banks be, right? And what kind of operations they should be allowed to undertake when it comes to the issuance and destruction of money, and what technology should they build then on top of? And should it be more siloed and nation state based, or should it be based on more of a global technology stack as the blockchain is? That's what we mean by that. We think we have the ability, and we have come up with a design for reconstructing this middleware of money, where essentially instead of a couple thousand banks in the United States, you could open this infrastructure up to hundreds of thousands of entities, in a way that is governed on chain, in a scalable way, in a transparent way, potentially to create like a new wave of innovation for this sector.
I was going to ask this a little later, but you brought it up. Money as federated middleware. I've been in crypto for a little while, a few 24s, and there's people out there who argue that middleware, kind of like Chainlink and others, are just a price feed and nothing else, right? And you said that banking is a robust, sophisticated, or crypto money is a robust, sophisticated middleware. So what's the fallacy in thinking that middleware is just a price feed? How should people think of it differently?
Yeah, I think there is a bit of that, that a lot of that middleware that is constructed in the space of money that we're talking about, it is still a lot about connecting. Um, I don't like the term, real world with crypto world, because if it makes it sound like crypto is not real, and it's very real. It's so real that we can manage our keys on pieces of paper if we don't want to use software, and it just works just the same. But I think you still have to connect. And using my prior way of explaining money, it's not about connecting the real world with crypto world. It's actually about connecting the foundation, the base layer of money with the infrastructure that can be built on chain. And a lot of that it demands technology that needs to be built off chain with technology that needs to be built on chain. So on building things on chain like gives us like a tremendous improvement in terms of transparency, speed of decision making, scalability of allowing that decision to be made by multiple counterparties in a very secure and transparent way, in ways that the current technology stack for central banking and commercial banking is far from that. It's far from being scalable, far from being transparent, and executed on a global stage. But you still need to connect all these benefits to the foundation layer of money, which is, in the case of the dollar, and the way that that it matters, at least for us at M0, U.S. Treasuries, right? Short-term U.S. Treasuries, which are for now the best base layer representation for what the dollar is. It changes from currency to currency, from nation to nation, but for the dollar, zooming in on the dollar, if you have the ability to hold on yourself as an entity to U.S. Treasuries, that's the closest thing to being connected to the foundational layer of the dollar. You need to connect that with all the stack that lives on chain. So it is more complicated than just price feeds, as you said. But at the same time, from a design point of view, it's not too different either. You're essentially trying to connect those two things and intermediate those two different types of systems and architectures. I think it is a complex type of capability that in our industry we need to continue to flex. Like you need to have very robust entities, governed in a very robust way that are able to have a step on each of those sides. And I think that's where the evolution still resides, like compared to things like price feeds and oracles, because I think a lot of that is still very incipient and pretty much not really as transparent as it can be, or not regulated. Regulated is not the word, not governed as it could be, right? So there's a lot of trust me, bro, still on those things. But we think for example, for the design of M0, what that means in particular is that we have entities that can connect to the protocol and have collateral that they bring to these off-chain structures, right? Which tend to be like very robust and very routinely utilized in environments like securitization and things like that for years, which are special purpose vehicles, right? Where you can lock up collateral and issue notes on the back of that, and only say that those notes are going to be utilized in a particular way. All of that clearly regulated, with sound oversight especially in particular jurisdictions. But then you need to connect that through the on-chain world. And so we have an entity, a type of entity in our protocol called a validator, which is essentially an entity that can look through on those off-chain boxes, if you will, and look and have a read-only access and see, yeah, there is collateral there. There isn't a particular amount of collateral. So I'm going to publish this information and to sign with my reputation, a claim that thing exists on chain. And if you multiply like those number of actors, and especially bring actors that are reputable, people like auditors and accounting firms and et cetera, and get them to be used to this new business model where they're basically attesting to these facts on chain just as they attest to it in other forums. We think we can build a sound connectivity between the foundation layer of money and the blockchain.
Interesting. So I got to tell you, back in 2004, I was in Nepal, and I traded some of my dollars for Nepalese currency. And then on my way home, I left the country of Nepal, went to Thailand with my Nepalese currency, and I tried to trade it for baht. And they said, "You can't trade that here. We're not going to take that." So that was some pretty bad currency, and Nepal worked, but it didn't work anywhere else. So you make a distinction between good and bad currency, right? What makes it good or bad besides the ability or inability to spend it somewhere?
Yeah, that's a big topic. I think when you ask that question, I think about it in two ways. I think there's form and substance, right? I think there's good money and bad money in two dimensions, in the form of it and in the substance of it. I think in the form of it, and particularly we were talking about the topic of stablecoins. Um, there's a lot of different form factors of money that are essentially like pretty much the same construct under the hood. I know most users of money, they don't do one thing, but I have a particular guilty pleasure that, again, it's something that I think nerd people who nerd around money, they do it often, which is every time you go and you use a new financial product, right? Oh, I'm going to sign up for this new account because I think it sounds interesting. It could be a payment account or some neo bank account or whatever. But really go and spend your afternoon sitting in the sun in the weekend reading their terms and conditions. I know I'm joking. Nobody does that, right? Why would you suffer from doing that? But if you actually go and read the terms and conditions, that's how you usually find out about how these things are constructed. And you're going to find, especially in a ton of different names of entities there, right? You're going to find out that you're not dealing with, nextbestmoney.ltd only, but you're actually dealing with a lot of other legal entities that are actually behind the scenes operating this financial instrument or construct. Um, and I think there's a lot of regulation to make sure that consumers are not harmed by that. But the form factor of money usually has this idea of what is good and what is bad, because I think sometimes people are using some form factor of money without really understanding the embedded risks that they have in there, right? Money, and particularly on the front end, has a lot of intermediation. So as I joked about, like, you can be thinking you're using an instrument from company A, but actually there's company B, C, D, all the way to Z, like also touching that thing in the backend. And any one of those could fail for different reasons, right? Or could have an issue for different reasons. And all of a sudden, the instrument that you're holding might expose you to a risk you never contemplated to be the case, right? In crypto, we saw, to your point, that's why we don't like the term stablecoin, right? In crypto, we saw that with Terra Luna, right? From a stablecoin pure concept point of view, Terra Luna was great. It kept its peg all the way to the last 2 days, right? Until it didn't. And then it was completely like burned to the ground. So like people don't have easier ways to measure the embedded risk, the level of intermediation that they have on money instruments, on the form factor, because there's no transparency around it, right? The transparency are these terms and conditions, which are, impossible for people to read and comprehend. So I think that's why, part of what we're trying to do at M0 is really reconstruct the stack, in this middle, to kind of remove a lot of intermediation and provide more see-through transparency, right? From the form factor that people are holding, which is a token on chain. But if they want to go like somewhere on chain as well, super transparent, updated on a daily basis to find out, where's the collateral for the thing that backs the instrument that they're using, that they can do so without like a significant level of obfuscation. But that's on the form factor. Then I think on the substance of money, that is closer to what I described as this foundation layer that really underpins what money is. I think it's very interesting. I would recommend for people who want to become like more nerds on money. There's a book called Debt: The First 5,000 Years. It's a really good book, and it talks about this idea that I mentioned, that the foundation layer of money, it really only kind of, bifurcated between two greater options, like over the course of humanity so far. One is a foundation layer of money that is backed by bullion, right? So precious metals, gold, silver, all the the piles of like something shiny and valuable that used to underpin forms of money, depending on the place in history that you land on. And the other option or the other approach that tends to be a credit-based approach to the value of money, right? And this is like IOUs. This is the trust construct that I mentioned before. Like I trust the government of the United States. So that's a credit approach. Yeah, that's I they owe something to me. Because I'm placing that trust with them, right? So there's a social construct in there. And these two fundamentally different approaches to how we value money society-wise, they have different qualities. Some of them are good for something, some of them are good for something else. For example, money that is backed by bullion can be stolen. You can claim that trust cannot be stolen, but you can also forge trust more easily that you can forge like hard metals, right? Um, Hard metals are very hard to like move around. So they played a role in history with more centralized societies. Trust is something that it's more based on who you know, so it's more decentralized by nature. So the way that societies have centralized and decentralized over time have also been more prone to using one form of foundational layer of money or the other. I think there are people who say, and it's an opinion. I don't know if I even have an opinion in this case, but I do like Bitcoin, and Bitcoin sounds a lot more gold. It sounds a lot more like hard money than it is like a credit-based approach. But there are people who say that, a bullion-based foundation for money is just better. It's more resilient over time. And it's interesting that now that we are seeing, in the last 15 years or so, the emergence of things like Bitcoin, that is really kind of an electronic gold or precious metal kind of asset, that we could see in conjunction with all this reinvention of money that we are seeing, perhaps a new era where there will be societies that will say we are going to give value to Bitcoin just the same way that we're going to give value to our government army or our ability to pay our bills or something like that. And I think that's really interesting to imagine how the world could be and how it could be different. But I won't like risk an opinion there, because I think it's too early to tell. But that's how I think you can look at what good and bad money is. It's both on the form factor, what the level of transparency you have to understand like who's intermediating, who's behind what you're using, but also fundamentally, and this is more of a political or philosophical discussion, like do you prefer trusting in government, or do you prefer trusting in things that are more factual? And I think it's a question that everybody has to answer individually for themselves.
Interesting. I think you answered I was going to ask you about how payment platforms could partner with crypto providers, but you explained to me pretty well there's two different paths. One is the debt path and one is the equity path. I want to find out from you though, what your take is on the future of fungible crypto dollars and the rollout of that and the robustness of creating that infrastructure for payment providers to provide more options for their customers.
Yeah, that's I have a lot of opinions and a lot to say on that. Thanks for bringing it up. I think definitely, as I said, I think the model that or the situation that we are in right now is not the end state. I think it's just a good step. There was a lot of great products and great companies being built in this space during this phase, but it's just a stepping stone into where we need to get to. Because again, if we were to just use the analogy of um, the current context of stable coins as they are today, and if you were to transport that just to use a rough analog, but to the banking system, right? Would people accept that dollars from one bank would not be interoperable with dollars from another bank, and you would need to go through like an exchange step in between? Would people accept that the vast majority of dollars issued in a particular sector to be owned by like a single player? Like all of those things are clearly, the answer would clearly be no. People would not accept that. People would demand change. And the fact that our banking system, at least in the US, again, if you want to stick to the US, the fact that our banking system in the US is already much more has much more better quality properties when it comes to our stablecoin sector. I think it's a testament that, you know, something's got to change. It's about time for us to see change. So what we are building at M0 is, again, is this infrastructure where any entity can come in, be approved by governance to become a crypto dollar issuer. But all of these entities around the protocol, they all issue the same asset, right? So again, similarly to how today in the banking system, Bank of America, Chase, all banks are issuing the dollar. Like there's no, fragmentation there. Yes, if I am holding dollars with Chase, I am holding a particular liability with that bank. And if that bank goes under, I might lose all of my dollars with that bank if you ignore all the protections that are in the system. But there is seamless interoperability, right? I can move my funds around and I'm not locked up to any particular provider. Usually it's free for me to leave one banking provider and go to the other one. The other thing that's very different as well is that banks have many business models, right? And they are not in the business of just issuing dollars. Like they are in the business of giving people credit, giving people insurance, selling people a ton of sophisticated products. And today, if I am a centralized crypto exchange, for example, or if I'm building an application that is just attracting a lot of customers, right? Attracting a lot of customer dollar deposits. Why is it that there's somebody else, right, monetizing those deposits for me? Why is it that I allow as a business to have these stablecoin issuers monetize all of those deposits for me? Because essentially that's what's happening, right? Like I am holding as a crypto exchange in this example, hundreds of millions of dollars of stablecoin deposits, and all of the money that's accruing on those reserves are going to the issuers and not to the players that actually create the utility for customers, create the use case for customers. So I think this model that at M0 we propose, which is, upside down, multiple issuers, but all issuing a fungible, a single crypto dollar, it's kind of inevitable. I think we will invariably go in that direction. I think finance in general has a lot of gravity and it tends to attract centralization by definition, just because, that's how things tend to get efficient. I'm going to create my own ledger and write all these transactions on my ledger. That's going to be better than trying to reconcile with everybody else. But I think now we have gone through enough of these cycles to understand that, the model has to change. And I think we are just living through a transition phase. But I think in the next 10 years, we will see a lot more share of digital dollar issuance coming from these networks that have multiple entities, right, that actually have a federation of issuers all issuing a fungible asset.
I'm definitely interested and intrigued to see how you guys everything plays out. Yeah. Wow. Lots to think about here. So I want to thank you very much for your time today. I enjoyed learning about money. I enjoyed speaking with you. Thank you. I have one last question. It's how can people find out more information about you, about M0? How can they get involved or do some more research, or however they, how can they do that?
Yeah, they can go to m0.org, which is the website of the project, and there's a lot of pointers there. But there's a documentations portal. There's a research secondary website that people can read about the stuff that our team likes to write about. And you can find M0 on Twitter as well, on the handle of the M0 Foundation, which is M0 Foundation. And you can find me on Twitter as well under the handle Reginato, which is my last name.
So M0 Foundation.
For Twitter, M0 Foundation altogether.
Got it. Thank you very much for your time today.
Thank you. Thanks for having me, Jamal.